2 words, Revo Fitness. Here's a few more. Simple, 24/7, reformer Pilates, body scanners, massage chairs, squat racks, free weights, pin and plate loaded equipment, no lock-in contracts, no bullshit. All of that and more from just $9.69 a week. That's surprisingly affordable. Join now at Revo Fitness Blair Athol or download the Revo Fitness app. RevoFitness.com.au or find the Revo Fitness app in the App Store.
Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Yesterday was an extraordinary day for markets. US President Donald Trump's decision to pause most reciprocal tariffs for 90 days triggered a massive rally on Wall Street. The S&P 500 recorded its best day since 2008, soaring 9.5%, adding about $4.3 trillion US dollars in market value. The ASX had a stellar day too, opening 6% higher. The gains moderated during the day, but it still ended up well and truly. This all comes after retail investors flooded the market earlier this week and late last week, hoping to buy the dip. And that's what I wanted to take a look at today. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Jon Howie is the CEO of trading platform Stake. Jon, welcome back to Fear and Greed.
Thanks for having me.
So tell us what's happened in the last week in terms of retail investors.
Well, I think, as you said, that the real story is that retail investors have used the opportunity, the volatility in the last sort of 3 or 4 days, ultimately to buy the dip. We've seen huge flows in both Aussie and US stocks. And what's interesting actually is that flow had slowed down a little bit in the week previous. I think investors had got a sense that there was potentially some volatility on the horizon. There was a little bit of doubt around, and on average, our customer base had sort of taken the foot off the gas a little bit. But what they've done is, as soon as there has been an opportunity where valuations have obviously come back, the prices have come down a lot. We've seen a lot of those investors come back to the market, buying the names that they know and they trust. Lots of flow in some of the large ETFs, particularly those with exposure to US markets, but also those names that everyone will be familiar with, the Magnificent Sevens, the Palantirs, Apples, Teslas, Nvidias, stocks like that.
Okay. And so has that run through the last 4 sessions? So we're talking, is it Friday, Monday, Tuesday, Wednesday, Thursday? So it's 5 sessions actually. Have volumes been significantly higher?
Yeah, we saw a big spike on Tuesday following the announcement, or the volatility around Liberation Day in inverted commas, but that's actually continued now. So it's off a little bit in the last 24 hours or so, but again, we've seen another very big trading day overnight in the US and also yesterday in Australia as well. So things are continuing, and I think we're seeing investors still of the view that whilst perhaps not as attractive as it was right at the market bottom when the S&P got down below 5,000, still a lot of investors are looking to put money to work.
And are the people on the Stake platform, do they invest mostly in Aussie equity? I mean, the locals, are they investing mostly in Aussie equities, or are they investing mostly in US/Magnificent Seven?
Yeah, it's interesting. We the shape of the portfolios that we see overall on Stake are pretty well defined. We see in Australia, the big flows generally go into exchange traded funds.
Yeah.
So we see a lot of Aussie investors who are investing locally. They buy the ETFs that cover the ASX 200, the S&P 500, the NASDAQ 100. Those are really where we see most of the flow. Now, there's obviously a very long tail of investors, for example, who are buying gold stocks or who might buy some of the smaller Aussie technology companies that are listed locally. But then on the other side, when you look at the average over the whole of our customer base, the single stock high conviction bets, if you like, are really in those Magnificent Seven US companies.
Okay. And any of those particularly popular, Nvidia, Apple, or is it all of them?
Yeah, look, it's all of them. I think what's been interesting, I've got some data here just on the ratio between buyers and sells. Yeah. And so Nvidia was 81 to 19, so 81% buys to 19% sells. So that was very popular. Apple a little bit lower, so basically 70-30, so 70% buys to 30% sells. But yeah, all the names that everyone would be familiar with.
Okay. When retail traders move in and out, Do you get the sense that they're fairly well informed about what they're doing?
What's interesting is that I guess it's maybe law of large numbers, but on average, I think our customer base are actually very good traders and investors.
Yeah.
So they are very, on average, they're very disciplined about, as I said, buying the dip. We do actually see flow numbers and activity levels actually slow down when we get to the kind of the top end of those bull market runs.
Yeah.
And then we see everything in terms of activity generally pick up pretty strongly when you get those dips. So in terms of like an investing discipline approach, on average, our customer base actually behaves pretty well.
Okay, John, I want to talk about the future in a moment. We'll be back in a minute.
2 words, Revo Fitness. Here's a few more. Simple, 24/7, reformer Pilates, body scanners, massage chairs, squat racks, free weights, pin and plate loaded equipment, no lock-in contracts, no bullshit. All of that and more from just $9.69 a week. That's surprisingly affordable. Join now at Revo Fitness Blair Athol or download the Revo Fitness app. RevoFitness.com.au or find the Revo Fitness app in the App Store.
I'm speaking to Jon Howie, CEO of Stake. So what happens next, John? I suppose that's the $64 question. We'd all like to know that. You know, we've had extreme volatility in the last 5 days or so. Do you think we're going to continue to see, I suppose we can tick the box in terms of volatility. It's just whether or not it's going to be extreme.
Yeah, look, it's an interesting one. I think if you look at VIX, the volatility index in the US, that got very high, I think up above 50 for a little while there a couple of days ago. It would be, I think, unusual for it to stay up there, but I think you do often see volatility clusters. So whilst volatility might not be quite as high as it was a couple of days ago, I think it's rarely the case that these episodes are over in a couple of days. So clearly what the US administration is doing is driving markets. What Trump chooses to tweet tomorrow or next week will undoubtedly have an impact. My personal sense is that the administration has, in the US, has maybe seen the whites of everyone's eyes to some extent and realises how damaging that could actually be to the outcomes I think they're trying to achieve. So the announcement of pausing the tariffs for 90 days yesterday is not surprising, given what was happening, certainly in equity markets, but also in bond markets, that the administration's been very clear, and Scott Bessent, the Treasury Secretary, has been very clear recently that part of his role is to be what he says the US number one bond salesman. Ultimately, the US has a lot of debt and it needs to be able to sell bonds into the market at reasonable rates. You saw US bond rates actually going up quite quickly, which was counter to their aspirations. Yep. And so I think what you will see is that the narrative coming out of the US administration will moderate significantly, because ultimately if bond rates go up much more, then they're not achieving what they want to achieve. So I would suspect volatility does probably slow down a little bit. We probably don't get back to sort of the mid-teens and low-teens levels on the VIX that you'd seen at the end of last year. But these episodes take time to work out.
You mentioned ETFs and talked about the ASX 200, Wall Street. Are people mostly investing in ETFs as a passive investment, or are there active ETFs then sort of flowing that through to active investing, I suppose? What do you get a sense in terms of retail investors?
Yeah, in general terms, so over the long term, what we generally see is our customers are using ETFs as long-term buy and hold investments. Mm-hmm. But I think what you've seen over the last 48 hours, 72 hours is we have seen a lot of flow in some of those ETFs where I think people are taking a more tactical view. So we've seen a lot of flow in, for example, some of the NASDAQ 100 ETFs in the last 24 hours. And so I think those are ultimately views on trading a market bounce rather than those long-term buy and hold positions.
Okay. Now, Stake has a lot of younger investors. Is there any sense that millennials, Gen Z, maybe we should be calling them since it's such a US market, Gen Z as investors, do they view the market differently to older generations?
Oh, look, I think they view the market differently to the extent that they realise they've got time on their side. and they are investing in those companies that they think are going to dominate over the long term, and I think are comfortable taking a little bit more volatility into their portfolios in order to achieve those returns. Older investors, I think, are generally more focused on things like dividends and franking credits and maybe things like fixed income. So, yeah, I do think there are differences, but we see, as I said, we see our investors, our customers, doing more than just, inverted commas, punting stocks. What they're doing is taking a view on companies they believe in, and they're also layering in things like ETFs to achieve diversification.
Okay. In terms of what's happened in the last week or so, John, have you seen that before? Just purely talking about retail volumes.
Yeah, I think we certainly saw a lot of retail volume during the COVID period. I think that was kind of well reported at the time. I think what's different this time is that certainly our customer base has probably matured a bit since then. They've now been in the market 3, 4, 5 years. They've gone through the volatility of that COVID period. The customers that have stuck around, which thankfully is most of them, have seen the upside of what can happen when you get it right in markets. Some of them have also seen the downside. Like, we obviously had a fairly sharp pullback in markets in 2022, I think it was. So I think a lot of our customers have that level of experience. So I think what we've observed in terms of behaviour now is we're seeing less in terms of turnover of some of those what used to be called meme stocks.
Yeah.
So during COVID, you had like the GameStop and all of those kind of things. We haven't really seen flow in those kind of names. It's been those bigger, large, established companies and those ETFs that are covering broad market exposures.
I think that's all good news. John, thank you for talking to Fear and Greed.
Great to be here.
That was Jon Howie, Chief Executive Officer of trading platform Stake. This is the Fear and Greed business interview. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.
Two words, Revo Fitness. Here's a few more. Simple, 24/7, reformer Pilates, body scanners, massage chairs, squat racks, free weights, pin and plate loaded equipment, no lock-in contracts, no bullshit. All of that and more from just $9.69 a week. That's surprisingly affordable. Join now at Revo Fitness Blair Athol or download the Revo Fitness app. RevoFitness.com.au or find the Revo Fitness app in the App Store.